Well, I'm delighted today to be speaking to Christophe Numa, who is the Managing Director of Bunker Group. Welcome, Christophe.
Thank you, David. Thank you for having me here today.
Pleasure. So, terrific to talk to you today at the Ritz-Carlton here in Singapore. We're going to talk first a little bit about you and the Bunker Group business, and then we're going to pick up on some of the latest trends and drivers in the gold market. First of all, coming to you, it'd be really interesting to hear more about your background and a little bit more about the business as well.
So I'm Christophe, as you said, Christophe Numa, and I'm the Managing Director of Bunker Gold and Silver. So actually, I'm from the banking system, in private banking initially, in France. Sorry, I'm French. And now I'm managing this company around 5 years, 6 years soon, where we allow our client to invest in gold. So we do that on 3 main focus. So purchase of gold, as competitive as paper gold, but maybe we will have time to dive into this concept.
Sure.
After we have the storage, we offer storage to our clients everywhere in the world. And last things, we are enhancing the protection of our clients because we are able to sell our gold in allocated, segregated, and LBMA certified way. This is what we are doing for our clients.
Interesting. So what, 5 years ago, what got you out of banking? Was it you just saw clients, there's more demand for gold, you thought this is just a sector I need to be in because you saw growth for yourself?
Interesting enough, in the private banking, I had some requests for clients. But it's true that usually there is no much client asking for gold in banks. We are more about financial product, right? But I decided after an entrepreneurial experience in Kazakhstan, Russia, and Poland, I decided to come back in the financial sector, but with some niche investment and very specific product, which is gold, and to understand how we can enhance, how we can disrupt this market, and this is what we are doing with Bunker Gold and Silver.
Fascinating. And we met last week in Dubai, where you're opening a new office. But how do you see the Middle East market for gold product?
Okay, I will be honest.
Yeah.
Since we opened Dubai, our turnover just goes to the roof. It's true. And interesting, we are not dealing so much with what we call Emiratis. We are mostly dealing with expats and people from Singapore because I'm still managing the Singapore office. But I'm able to leverage on my contact in Singapore to build a new layout of business in Dubai, and this works perfectly well.
Fantastic. And Dubai is booming, isn't it? Anyone walking around DFC notices the buzz, the clients coming through.
Yeah.
It's fantastic.
Singapore is very interesting because it's a stable economy, so you know what kind of people you will meet, you know that you can have basis. But right now, Dubai, it's mainly like a country where you have a lot of opportunities. You have to be careful. It's very important. But you have many opportunities.
This is why working with the right counterparties is crucial for clients to have trust and confidence. So just turning to gold as an asset, we mentioned at the top there's many ways people can get exposure to gold. Perhaps you could just describe for clients or intermediaries interested in learning more, what's the difference there between owning physical gold or some of the instruments like your ETFs or other variants that you might own?
The main difference between physical gold or ETF will be the underlying product. Meaning that you have, when it's physical, a real asset. ETF, it's tracking the price of gold, right? So it means that if anything happens, exchange can close. The last exchange closed on FTX right now, everybody talk about this situation. But even if your exchange can close, you still have an underlying product. But this is, let's say it's from the past, the fact that you have to choose between ETF or physical gold. Why I'm saying that? It's because right now, and we offer this opportunity with Bunker Gold and Silver, you are able to invest in physical gold at the same price or even sometimes less expensive than an ETF. So right now I'm saying that you can have the physical, the asset, and the same price and liquidity as an ETF. So for clients, it's become very obvious to go for physical gold with such condition.
I mean, how do you make that happen then?
This is a good question. To be honest, it's because we manage to cut all the intermediaries and to also have better price with refineries when we are buying in bulk, and using technology also, we manage to cut the expenses. So everything is about rationalizing. And at the end, you understand that you can have a premium on physical, which is normal, right? But it does not have to be so expensive as it used to be. And now we are able to compete with all the financial products like ETF, as we said.
Because there's also a genuine question about whether there's sufficient physical gold to actually back these ETFs, aren't there? You know, it's that lack of security perhaps that as a financial product.
Basically, I will summarize it like that. Banks do not have the gold that they are selling. That's all. So if I have to go a little bit more into details, I will say that they have 1 bar for 10 bars of gold that they have selling. So if tomorrow you have, not a rush, but even clients who want to take their gold, they will not be able to do so. So this is why it's very important when you are a client to buy physical gold allocated and segregated under your name. This is very important. And obviously, not to let it in the bank.
Particularly in times of financial stress and volatility, because in that environment, if everyone's rushing for the exit and there isn't sufficient gold to actually back these instruments, it could cause investors real issues.
Exactly.
And not so much anymore, but people in the last 12 months have been saying about crypto being an alternative to gold. Obviously, crypto is having its struggles right now. I mean, how do you see that as, just as a bigger picture, people saying, as an alternative asset, people putting one against another as a place to store value?
Let's say, is it?
Yeah.
Let's say gold, crypto is an alternative asset. Fair enough. What I can see, we do have crypto funds who they will back their crypto strategy with physical gold. So for me, it's very interesting. So because when the market is very up on crypto, I mean, I still have crypto fund backing their strategy with us. But when the market's starting to be down, I still have the same clients, so final clients, they will liquidate their positions in crypto and they will buy gold. So either I get the final client directly, either I got the crypto funds or hedge funds. Okay, on both cases, it's still gold behind.
And gold's historically as well the ultimate hedge in difficult times of volatility. I mean, the story of how far back that goes is fairly incredible, and also in certain cultures there's more emphasis on buying gold. Do you see that coming through into your business? Do you deal with clients in certain parts of the world, or it's a very global trade, is it?
It's a very global trade. Yes. What will be different? The difference will be more about cultural. Okay, how do they transact gold? Which kind of gold do they want? Do they want LBMA gold? So just to precise, LBMA stands for London Bullion Market Association, and it's the regulatory organism for gold. So everywhere, India, Middle East, Russia, everybody is in gold. The only difference is how we will make the transaction. So this is another topic, but we are all in gold.
Okay, interesting. And then in terms of storage, based on, I suppose, partly where the client is, but also on where they feel comfortable with the security, where is it you see them? Where are the most popular storage locations, and how do you interact with people on that?
So as I said, we give access to our client to the best and the most the safest storage in the world. This is it. After, it's true that you have two strategies. The client who will decide, okay, this gold is for me in terms of crisis. I want it near me if I really need it, right? And you have the client who say, I want to diversify my geographical exposition, so it will decide to put it out of his country.
Far away.
Exactly. Yeah. Like that, he knows that if he has to fly there, he will be able to take his gold. Mainly right now, you have two jurisdictions for private investors in order to keep gold. Singapore, Switzerland. Switzerland, Singapore. It works like that. This is where they keep their gold mostly. Now Dubai, but it's still small in terms of protection, by meaning that they put the gold in Dubai as a protection. They prefer to put it in Singapore and Switzerland.
Dubai is more a place to meet, isn't it? To transact, to engage.
Exactly.
Yeah.
Maybe in the future, because they are doing a lot of effort in order to be at the same level of the Switzerland or Singapore. But it's true that for now, it's still the other countries.
And in North America, I mean, that obviously there's facilities, but it's not like you say. The global places are with Switzerland and Singapore.
Exactly. Yeah. Because even for North American, it could be Canada, they will send it to another jurisdiction. For some, they will keep. Of course, you all the time have to keep a little bit of gold with you. When I'm saying with you, it's in your home country. But after, it makes very sense to diversify your geographical exposition. Why? It's because you might have to fly in another country, so you should maybe have your gold also there on another continent.
And perhaps you could describe, the physical storage facilities. I mean, it's not in a bank. You can have a private storage facility. People might picture it in a bank, but actually, what is it like when you go and visit one of these private storage facilities? What's the setup?
Your passports and your proof of ownership. Why? These storage facilities, as I said, are the safest place for storing gold in the world. And what they give you access to your gold at any time, in any conditions. And this is a very important point, because and I have this concrete example. When you had some clients, they could not get access to their gold in some banks, not because the banks didn't want to give them their gold, but because the bank was closed or was just putting some transactional limits, and you could not have access. So it's very important to let your gold out of the banking system, because you are just protecting yourself against any kind of risk, any kind of crisis, economical. So you don't want to let it in the bank for that.
Yeah, so if you have a specialist business just on that, there's no risk on that company particularly.
Exactly, and you know also why? Because when it's your gold, it means it's not on the balance sheet of the company. You are the owner, you have the ownership, so you can go and take your gold at any time. So it's not even on the company exposition.
And are these facilities in central but discrete locations, unmarked? Or are they a drive out somewhere? Are they remote, or are they? What do you?
No,
how
actually,
would you describe how you find? How you see them?
Yeah, actually, it's not like they are not secret.
No.
Because you know where is it. You have to know where is it, and there are sometimes big buildings. So, but you don't know what is it. You don't know how is it inside. And when I go with my clients, and they see their gold in their safe warehouse, like as vault, their safe vault, they all are impressed by the security. They feel like they are in James Bond or
Yeah.
Mission Impossible. You know, you have and it's very like that.
It's real, isn't it? It has
Exactly.
to be serious.
You know,
Yeah.
you have to see. You enter, of course, like a portal facility, where you go to airport first. So they will check your weight. They will see, do you have gold already on you? What is because they have to check if you have weight in and weight out. Is it the same weight? You see. So you have 10 meters down to go to the vault. You have 7 tons of doors, and the security is very, very, very developed. No, to be honest, everybody is impressed. Even me, when I go there, I said, it's cool here, right? Yeah.
And what about the transactional side? I mean, so say someone is buying gold, it's in a private storage facility. How do they pay costs and fees, and what's the charging structure generally?
For us, we have a platform for that. We have a trading platform, a
Yeah.
simple trading platform, meaning that you are able to buy and sell directly on the platform, and your gold is still in the vault. Okay, the transactions are very transparent. It means that we have 0.5% of fees. This is what we have, and 0.3% for the storage. So client buys and sell, buys and sell, buys and sell. So they decide to collect his gold, he just go and collect his gold. The day he decide to sell it back to us and to withdraw the money, he can do also. And everything is on the platform. The only things which is not on the platform is the fact that you have to go for collection or ask us for delivery.
And prices are just determined globally on an index. I mean, if someone decides on this trading platform where they want to buy, who makes the market?
We have the international price.
Yeah.
So it is the same for everyone. You go to Bloomberg, you will see this price. Usually it's a LBMA COMEX price. They are the one doing the market mainly. This is it.
And then in terms of within all the costs, is there like cost of insurance or extra? What might be
everything is
wrapped into the
included.
fee?
Everything is included. Because cost of insurance is mainly for storage, right? When you buy it, where do you let it? You let it in the vault, and the vault we have the insurance with it. So it works like that.
And just looking at, the macroeconomic picture, why people actually buy gold. Some people might say, well, look, you've got real estate. I could buy a London mansion and it's going to hold up its price. And even if it doesn't, at least I can use it in the summertime. Pleasant place to go. What is the value of gold for that investor versus other assets that they might, invest in?
So let's put it that way. First, you obviously have people that will buy, investors that will buy gold for trending reason. Okay, now it's inflation. Now it's economic downturn, so we have to buy gold. But let's put this aside for a while. What is the real reason? The real reason is simple. It's because it's money. But it's money who doesn't lose its appreciation over the time. We are talking about the money which is here from 40,000 years. So if you want to keep your asset, to save your asset, gold is the best place for doing that, because over the time you know that you will not lose any kind of asset. I wanted to say value, asset value. And the other things is it's fungible. When I'm saying fungible, you can go everywhere in the world. You have a market price for gold. I'm talking for bars of gold, investment bars, right? You have a market price, and it's mobile. You can go everywhere also. When it's about your house, it's true, it's good investment. Yes, you can go there, but you cannot take your house and sell it to another country, right? And sometimes it takes time to sell it. So this is why
liquidity.
Exactly. So this is why it has a very good aspect on that.
And historically, I suppose, the US dollar, there's a strong dollar at the moment, but there's uncertainty because of US government debt, inflation, all these things. So that's why people might go away from the dollar and in towards gold, because as well you have to have a bank account to host that, to hold those dollars, and all of those additional frictions create.
there is many theories why people can go from dollar and to gold. One is very interesting. We call it the milkshake theory, which is very interesting theory. But I will stay on the gold. So, as I said, gold is money. So, gold has not value in dollar. Dollar has value in gold. So, if you want to have dollar right now, of course you can, and you should maybe. But
it's not either or anyway, is it?
Exactly. We are not. Yes, exactly. But you have to be very conscious aware about the fact that this gold has value over the time. And if you want to keep the value, because it's a value in any currency, not only in dollar, right? Tomorrow dollar doesn't exist. You have also, okay, now you have euro, but euro is not so good. So, but tomorrow it's another dollar. It still have value. So this is the point which is very important when you decide to invest. You keep your wealth, and this is very, very, very. Yes, important.
And I mean, interest rates are rising now, but obviously gold has no coupon. You know, does that impact? How does that, if rates do start picking up globally?
I will tell you a secret.
Yeah.
Gold has coupon.
Okay.
This is the first thing.
Okay.
It's very interesting because in the common belief, gold does not have coupon. Gold does not have coupon for the retail investor. But when you start to invest more than 1 million or 2 million, you can have coupon on gold. So, and to be honest, I am able, or at Bunker, we are able to give this opportunity to our clients. But gold has coupon.
Okay.
So this is the first.
Other commodities, like you mentioned, obviously on the top, you're also in silver market. There's other commodities people might consider. I mean, how do you see the interplay between gold and other commodities for clients you work with?
You should see your investment in precious metal as a portfolio. So you decide, okay, I have gold, silver, and platinum. Why these ones? It's because these precious metals are the most liquid. You also have palladium or rhodium, but this is a really niche market and it's not so common. So what happens usually, you will have a base of investment in gold. But if you are looking for performance, you go with silver. So you add silver. And if you decide, I want to speculate, you go with platinum. Because this typical metals is a very speculative metal. Silver, which is in the industry, is more volatile, so you can add performance. And gold is more stable, so it's the first one. So it's really like a portfolio when you diversify your allocation. It works like that.
Thank you. And finally, I mean, what would your key message be to clients considering investing in gold right now?
Do it. This is the first thing. No, obviously.
Get some exposure to the asset class.
Exactly.
Yeah.
Get the exposure. The price is no more a consideration because you can have physical gold as a price of paper gold. Yield is possible. You can make money on the gold that you store. You can transport it everywhere, and so you have mobility. And it keeps its value. Invest in gold. That's all.
And for intermediaries who might be supporting clients who don't necessarily have a comprehensive offering around the space, what would you say to them about how they might work with you on clients?
We already work, as I said, with intermediaries, crypto funds, hedge funds, and also all the clients we are in the space of what we call Plan B, like we work with the company investing for passport, for example. So yes, we already are working with intermediaries, and we find all the time a way to work together. So for the one who are in the money asset, money management, we do open an account for them, and they are able to manage their account for their client directly on our platform. So this is how we do basically.
Fantastic. Well, look, Christophe, terrific to talk to you today. Really interesting to learn more about the gold
Thank
market.
you.
We look forward to sharing this interview.
The latest technical content delivered through global conversations with professionals for professionals.